welcome here, and thank you for coming to hear me. We're going to talk about Bankers Investment Trust. My name's Alex Crooke, as stated. I'm the co-fund manager of this trust. I've been managing this trust since 2003, so it's quite a long history here with it. So we're going to whistle-stop through it. Please come and see me on the Janus Henderson. We're managed by Janus Henderson at the top right there. Stall, if you want some more details, I'll be available afterwards. So what are we going to talk about? Very quickly, we're going to run through really what the Bankers Investment Trust is, what it provides. Then we'll really try and spend a bit more time on where we're investing, why we invest in global equities. That's what the trust is about, and really what opportunities, therefore, that gives you as an investor in the trust. So really just a bit of background on Bankers. It's a very old, jump through, there we go. It's actually one of the oldest investment companies in London, or listed on the stock exchange. You buy it on the London Stock Exchange through an investor account. And really it was launched in 1888 by a group of bankers from Williams and Glyn, a bank that's now sort of part of NatWest, in 1888. And it was designed to really democratize investment for smaller investors. In those days, you were buying bonds, they cost £100, we're way beyond most investors' reach, and we're still doing that, which is lovely. So nearly 140 years later, it costs you just over £1 a share. So for very, very modest investments, you can get exposure to global equities, to investments and companies all around the world. We have two objectives. One is to grow the capital, so that's the amount of money, the share price, effectively, that we trade at in the stock market, but also to grow the dividend, and to grow that dividend in real terms, so above inflation. Over the last 59 years, you can see the track record on the dividend there. Every year for the last 59 years, since 1966, when they actually held it, they didn't cut it, but we've increased the dividend every single year, and roughly by about twice inflation, the rate of inflation over that period. So very strong growth record, capital and income. We invest in companies, so we buy the equities of companies all around the world, focusing really on the quality names. So trying to find companies that grow their profits, grow their revenues, and particularly ones that are cash generative. So a little bit beyond the startup phase, really trying to find companies that are cash positive, because that cash that they generate can be used to grow further, grow quicker, to buy other companies, but also to grow our dividends. Portfolio is roughly 100 stocks. We're quite a big trust, nearly $1.5 billion of assets, so plenty of liquidity in the market. And as I've mentioned, really, we can invest anywhere in the world. So you'll see that in a minute. All regions, all sectors. I think my clock's not going, by the way. Get an extra few minutes there, but you keep me going. And finally, the costs. That's really important. You will find that. I think it's critical that you pay a reasonable price. So 0.51% is our ongoing charge. And that's really, I think, very competitive in the market. And so, that's, I think, again, critical. So the team. I've been managing, as I said, for 23 years, this trust. Richard Clode on my left, again, 20 odd years of experience in markets, has just joined last year to join me on this trust. And we're supported in terms of the stock picking. We pick the stocks, but we've got collaboration in Japan and Asia from our colleagues Junichi and Sat there, again, both with nearly 30 years of experience. So you really are getting a very, I think, experienced top team. As a trust, there's an independent board here, so there's directors which appoint us, Janus Henderson. So I think there's another layer of support there and confidence I think you should have in terms of challenging us. But we're also supported by the wider Janus Henderson team, which you can see at some scale here. We're listed in New York, but we're very much the core as a British business, 2,000 employees globally, lots of experience in different markets. For me, what's interesting is our central research. We have 38 analysts, really just providing information, research on companies all around the world. We also cover some areas that are key sectors like technology, property, healthcare. Again, we've got 3 PhDs looking at healthcare stocks just for our own internal research. So again, really well resourced to find the best opportunities in the markets. So let's get under the bonnet a bit quickly. What is Bankers in terms of where we invest and what do we own? So if you look at a geographical spread, you can, unsurprisingly, there's a lot of US. We've been building that recently, the last sort of 6 months. Our view is definitely that America's probably more insulated from some of the trends and pressures, particularly in the last month or so. Much less exposure to energy. Energy is a much smaller proportion of the economy, and they generate all their own resources there. So again, I think as a shorter term, North America should be more insulated from a lot of the trends we're seeing. The other big exposure, relatively speaking, to many other trusts is Japan, which we're very positive on. Again, we've got a new government there, very pro-growth, companies expanding, and we're seeing also corporate governance improving, so companies being better managed, better challenged to grow their dividends and invest. So again, that's a nice, I think, sideline investment there. When you look at our sector exposure, again, I'm sure you look at a lot of funds, but technology is a big component for us, but it doesn't dominate. So it's about a third of our investments. We're very much focused on hardware, semiconductors, which we feel, and again, is the best growth opportunity currently. Very little exposure to software, which is a bit more challenging with AI probably taking some of the margins in that business. We used to be quite exposed to financials. Again, in the shorter term, we reduced that. Some pressures again coming, maybe interest rates go up to reflect higher inflation. And industrials is an area we've been building back into, which again, you should see some interesting trends there. I'll talk about industrials and electrification in a minute. So that's sort of where we're broadly invested. There's more online. Again, go and search us out, and there's a lot more details of some of our investments. We're very much global, and I think that's really important to make that point. It allows us to invest in major trends. So if we take in the last year or so, memory has been a really important trend. We've seen very strong price appreciation of memory and the price of memory, but all the manufacturers of memory chips are really in Korea. So again, that gives us, we're global, we can go to Korea. We have very strong holdings in Hynix and Samsung, not quite making the 10 active positions there, but still key investments. TSMC again in Taiwan. So we can get hold of these very nice investment themes and put them in the portfolio. We've also therefore allowed a bit of diversification. We're not all on one theme. We're not all on one region or one market or one sector. And therefore, I think we have a greater investment universe relative to many other funds. I've put the top 10 active positions here. For those, again, that maybe don't think about that, it's relative to the benchmarks, so the global markets. So it sort of shows you where are our bets, where are we actually putting our money relative to the market and saying these are the investments you should own more of than the rest of the market. And so you begin to see there some interesting trends. I mentioned US is our largest exposure. NatWest just makes it a UK bank onto that top 10 list. But behind this are National Grid, Unicredit, Italian bank, Japan Post Bank, our largest Japanese holding. So there's plenty in the top 20 that are non-US. But you get a nice theme of some technology, but not all technology. Amazon is our largest sort of technology bet there, followed by Alphabet. And you see nice exposures to some of the key biggest banks in the world as well, which I think is interesting. Again, more online. Let's talk about one of those themes. So how do we, sometimes we find very interesting opportunities. So electrification is one that I think is very important. We've had the bar chart in the middle there. You see over this US power demand. And over the last 20, 25 years, really very static. It's grown 9% over basically 20 years. And that's because of efficiency, LED lights. We're just using less for more. But you can see the blue lines are showing the next 20 years. We're expecting very strong growth, 38% growth in power consumption. And that's electrification. It's moving from carbon in your car or in your house, burning gas for heating, to electrification and the whole approach of how do we move that energy around. So for us, we see the opportunities. I've listed some of our holdings. What you get there, though, I think we see the greatest opportunity in the grid, the moving around of electricity, and the infrastructure of building these grids, so we can move electricity from maybe solar or wind offshore to where we actually need to use it. And so we see that as a very interesting opportunity. And some of these companies, I think are very global and allow us some great growth opportunities over the long term. And they're less exposed to interest rates, to other factors in the markets. Very quickly touching on technology and AI, sort of short graph, but saying I think really where we've been moving in the last few years, we're sort of at this agentic AI, where AI is beginning to do things for us, to take over roles and improve our efficiency and gain. But we're moving to the next stage of physical AI, self-driving cars. Again, if you take Waymo, which is owned by Alphabet, one of our top 10 active positions, they're doing 500,000 journeys a week now in a purely robo taxi. They've done 20 million journeys since inception. now in 12 markets in the US. These things are coming very rapidly to us and generating growth opportunities for our investments. I might not touch on that one. I mean, in terms of performance, I think what you get with Bankers Investment Trust is hopefully a very good growth over the long term. You can see the share price on the left. I don't know why we picked 89. It's sort of roughly when I started work. But in that period, just over 10% annualized return. Since I was sort of managing this 2003, it's about 11% annualized return. So, you're getting, that's your core holding, I always think, growing nice and consistently. So yes, there's some volatility. We own equities. They don't always go up every week. But I think in holding that through time, you begin to see the consistency, hopefully building, a nice pot for retirement or other means. In terms of dividends, I mentioned that we grow roughly twice inflation. The orange line is CPI. You can see the Bankers' purple line is generally above that. Occasionally you get spikes in inflation, as we saw in sort of 21, 22. But you can see how, again, Bankers caught up with that quite quickly. And over the long term, delivering twice inflation. So sort of touching really why now, why opportunities in global equities. I do think AI is leading to great opportunities for us, but it's more, I think, in efficiency and productivity gains. And therefore, I still think we're in a mid-cycle recovery in markets. I know markets are on all-time highs, but I still think there's lots of opportunity. Investment spending is actually accelerating in a number of areas. That's always led to better earnings growth over time. And valuations are not stretched. Again, you can go and look at some of these global names. Amazon is on about 20 times earnings. It's much cheaper than many other stocks in the market, growing at sort of 20% per annum in terms of returns. So I think valuation's not stretched. There aren't obvious sort of signals of late cycle. Property market booming is not happening. Banks are not excessively lending. So again, a lot of the things I think are looking quite constrained. If anything, it's governments are spending probably beyond their means. So you're going to see a lot more issuance of government bonds. But I think equities are increasingly, to some extent, getting scarcer. Actually, the companies are buying back material amounts of their own shares. And as I say, I think we're still mid-cycle in terms of earnings recovery. So finally, where does this fit in? I've never sold a share in Bankers. I'm sort of in 23 years. It's my core holding. I own 12 other investment trusts around that. But to me, it's a core holding. It should sit in the middle of your investment strategy, and it's global. So again, we can invest in these trends. We can invest in companies all around the world. And then finally, you get a lovely growing dividend on the back of it. So I'm 20 seconds out, and I've just about nailed it on time. So thank you very much.
So,
come and see me on the stand.
Have you ever been on a robo-taxi? And
I have.
And if so, did you feel safe?
Yes, it's an odd sensation for a minute or two, and then you sort of forget it and start looking at your phone and talking to the person you're with, and off it goes. But 500,000 journeys a week. I mean, it's at scale and it's working. Yeah.
And when would you ever sell shares in the Bankers Investment Trust? When would be the right time for you?
Well, I think that it does relate to age. So the older you get, I think you do want to be, looking to de-risk a little bit the equity exposure. But I talk to people, I think sometimes people do that too early. We are going to live, hopefully, medical science and, to a good ripe old age. And therefore, don't quit equities too early. But definitely there is a cycle of moving towards more conservative. So that's credit, fixed interest, returns over time, but not yet.
Okay, so my final question, therefore, is you talk about longevity. So in terms of your top healthcare holding, what would that be?
So Stryker is probably the one we hold, which does a lot of the, it's new hips and new joints. It's all the technologies relating to getting people moving again and mobility. And again, that long aging population, wanting to live and be healthy. I think something like that is really generating. So you're not necessarily, drugs going out of patent. This is new technologies and innovations keeping people fit and healthy.
And happy.
Thank you, yeah.
Thank you, Alex. Thanks very much. Thank you.